Hello, everyone. Welcome to our YouTube channel once again. So today we want to look at the differences or the similarities that we have between price action trading, ICT trading, or SMC trading. So we have a lot of strategies for trading out there, and I think people tend not to understand the difference between some of this. So from here, price action, ICT or SMC, whichever strategy you're using for trading, all we need to understand is that they are all subsets. I mean, ICT and SMC, they are subsets of price action because if you look at the three strategies, they involve trading without the use of um, these common external indicators that we have, like moving averages, Bollinger bands, oscillators, and a lot of them like that. Okay, even if we still have some indicator being used, they are still, not a major point in deciding whether to take a buy or to take a sell. So they might actually be using them as a guide towards knowing something. All right, unlike someone that typically uses moving average to take a buy or to take a sell. So when you say price action trading, it simply means looking at the chart and reading whatever the price is saying candlestick by candlestick. So you analyze the charts, you look at the charts, you read the charts, and you'll be able to take a decision whether you want to take a buy or a sell. So for basic price action trading, might involve the use of drawing a trend line. Oh, there's a bounce of the trend line, then I'm going to take a buy. Or there's a bounce down, or the market is trying to react from a particular zone. You say, oh, this is resistance, I want to sell. So those are the kind of way we majorly look at price action trading in basic term, or let me say for as a starter, as a newbie in trading. So it is just all about reading price, reading the chart, understanding the chart without the use of any external indicator. So the development of ICT or SMC, you look at this diagram we have here. So I was able to say, okay, ICT and SMC, they are like a subset of this price action, because when you look at ICT and SMC critically, you understand that they also involve reading the candlesticks, reading price without the use of many of these indicators that I mentioned earlier. So if you try to look at ICT, the inner circle trader, it's a group. This strategy was developed by someone actually. So if you look at the things that they trade, they use structure. High city strategy uses structure. It imbibes the concept of FVG, or fair value gap, or some people call it imbalance, as their mode of entry. Then they also look at the concept of liquidity in form of old highs and lows, equal highs and lows, trendline liquidity, and the likes of them. Then there is also a concept that they have. They call it turtle soup concept. So they also look at that. Then they have another thing called the LNKZ. So that is the London New York kill zone. So they kind of use this period as a period where they can take trade. There's a way they adapt that to their trading strategy. All right. So this London New York key zone now, there are people that develop an indicator for it, so that they can know, oh, we are now at that key zone that ICT traders are looking for. So it's just to give them an indication that yes, the time is on now. So you try to look for what you're looking for. Try to look for your entries to take a buy or to take a sell. So it is not like that indicator now is giving them a direct order or idea to take a buy or to take a sell. Unlike a typical trader that uses trend line, you know, or someone that uses oscillators, Bollinger bands to decide whether to take a buy or a sell. So that's just the difference in the use of the indicator. So for SMC, which is smart money concept, they also look at structure the same way High City look at structure. So SMC is a concept that was actually I think it was brought out of ICT. So they borrowed some concept from ICT, then they now re-strategized and brought about another concept called smart money. All right. Now, if you look at it, both of them use market structure because that is the basic of price. The basics of price. If you want to understand price, you have to understand structure. Now, SMC also use fair value gap and imbalance, just like ICT. But where ICT use this fair value gap and imbalance as entry, smart money concept traders use it as one of their own entry criteria. All right. So then we also have the concept of liquidity. SMC uses liquidity as well, hold highs and lows, equal highs and lows, trend line liquidity. But for their entry now, instead of using the FVG and imbalance like the ICT traders do, they use what we call the other block, which is OB, as entry. So after seeing an FVG or imbalance, they won't try to pick an entry from there. They will have to, look at the closest other block to that fair value gap or imbalance before they are going to say, oh, this is where they are going to take a trade from. All right. Then they also have other concepts, just like ICT has the turtle soup concept, the London New York zone idea, smart money concept. They have what they call change of character. So probably when the market has been creating lower highs, lower lows, lower highs, lower lows, and suddenly we had a creation of higher high and higher low. So then they say, oh, we've cited a change of character. All right. They also use something, the concept of inducement before their other block. So these are some, when you look at the ICT and SMC, you could see that they have similarities and at the same time they have differences. So in all, whether you're a price action strategy trader, you are ICT trader or SMC trader, the idea is just that you want to trade and make money. All these strategies, all these concepts, they work. Okay, even for those that uses Bollinger Bands, moving average for trading, those that trades Wyckoff and all of those strategy, they are making money. So far you understand your strategy, you have an hedge. So there's nothing like, oh, this is the best strategy to trade, this is the right one to trade. It is just sometimes it is about the strategy that suits your own personality. Like, oh, I think I understand this easier, I trade SMC. For example, initially I was learning ICT before I decided to go for SMC, and I discovered that, oh, I have an edge with this smart money concept. Then I have been sticking with that for over 4 years or 5 years now. So that is the strategy that I've been using for trading. So the same thing goes for those that uses ICT concept. I had someone that switched from SMC to ICT because that was where he found his own edge in terms of profitability. So you cannot write any strategy off. So far you understand it and it is making you money, it is actually a good one. So at Amage Trading, we teach advanced concept, price action trading, ICT, SMC. You want to learn Wyckoff, you can as well send us a DM and you'll be happy you did that. So I'll see you in the next video. I hope you enjoyed this one. Like and subscribe. Thank you. Bye.